which is incredible given the gains. What was it, 91% you were up in it
Yeah,
last year?
somewhere close to 100% last year, and his view and my view is over the next 18 months could do the same again. See, the issue I have with this is, okay, so we've got inflation. What happens? You raise rates. What happens? Markets eventually slow down. The economy slows down. Eventually, the stock market goes down, and eventually, the Fed come back in because they can't allow the collateral of the market, the equity market, the bond market, whatever, to fall apart. So then they stimulate again. So I'm like, well, it's kind of a never-ending cycle of even if it comes off, it stimulates. So I'm not worried by it, really, I guess.
And you're not worried that inflation stays high enough that it prevents them from sort of looking after the asset market? Some people think they want to take steam out of the asset markets.
I don't think they do. I think, look, that's the risk to my view, is that I'm wrong, and growth itself, let's say later in back end of 2022, is stronger than I expect, and inflation persists at 3.5%, 4%. That I would be wrong. And if that was the case, then we're going to see a more prolonged bear market in these higher growth tech names. Bond yields, I don't think bond yields would move a lot on that, but we get more of this market rotation in the equity market, stuff like that.
We have a question from JB on the exchange. Since we're talking about the potential for all of the tech stocks once again to take off, what's your opinion of ARK and Cathie Wood?
So it staggers me that people get emotional about somebody else's portfolio. And people get emotional about Cathie Wood. They don't like it. Why? Because it's all about change. And it's all about, non-traditional valuation metrics using things like Metcalfe's law. They don't like it. I really respect Cathie's view. And yes, she's dealing with this massive rotation out of the names that she owns. It's normal. I have a log chart. I have an ARK that I look at all the time, a monthly log chart. It's about 2 standard deviations oversold in the trend channel. Most likely, we're at the lower end of the range. $70 is 2 standard deviations. We hit 78 today. Does it break it? False break, go higher? Probably. So I am getting very interested in accumulating. I've been talking about this trade for a long time, been waiting for this to set up, letting the inflation narrative get bigger and bigger and bigger, let people throw the baby out with the bathwater, which is the network growth stocks that you absolutely want to own for the next 10 years. We're getting an incredible entry point, I think. Now, I understand people think there's technical difficulties because she ends up selling liquid stocks to fund the illiquid stocks. I get that. Let's see how it plays out. I get there's a risk. That's okay. Markets have risks. And we're all adults and we decide what risk we'll take and what risk we won't take. I'll probably take that risk.
Entry point is really important, isn't it? Because, we've seen a lot of concern and a lot of angst over the decline we saw in crypto from the November highs. So if you bought at that time, it's been incredibly painful and stressful for people. But in your note, in your GMI note to your investors, your think piece in January, you kind of reminded everyone what the gains were in Bitcoin and ETH last year. I think it's worth reiterating that, right? It depends when you get in.
That's right. I mean, last year I had one of the best years I've ever had, and Ethereum, which was my biggest bet, was up 450%, and Bitcoin was a smaller bet, and that was up 60%, and a whole bunch of stuff was up hundreds of percent. And that's not to boast about me. It was about sticking with the plan that I had, and I got the right timing to get in at the right time. So if you remember at the time, I'm a macro guy. I wait for the buses to turn up. I don't try and, I don't try to find every trade. I'm not interested in that. I'm not a short-term guy. So I wait and wait and wait. And I waited for that crypto opportunity. I'd been saying for maybe 2 years, 3 years that crypto and macro are about to meet, and it's going to meet at the next recession. The Fed are going to have to print massively, and this is the time to buy. And I went all in. And I've been talking about the exponential age for an extended period of time now, saying, listen, this is the big trade. The big equity trade here is the exponential age, which are all of these network adoption models of modern technology. So here we are setting up exactly the right trade, which is stuff like ARK or Scottish Mortgage, all of these things. They're all coming for the entry point. Get the entry point right at the maximum point of fear when everybody says, this is terrible. That's the point you can drive extraordinary returns if you're a long-term holder. I'm not a trader, so I don't really care about the next 3 months. If I buy ARK, I'm expecting to hold it for 5 to 10 years. And if I get it right, it'll go up 10x. That's what I'm thinking.
Yeah, I think that's so important because there have been a lot of sort of existential questions in this decline by skeptics, who will say this is proof it's not working, and there has to be a more nuanced conversation. I want to circle back to crypto in a minute, but I want to talk about another trade as people are looking for opportunity, because in volatile markets, right, you also want to find the opportunity. We've had a lot of questions about that. Can you talk to us a little bit about carbon, because that was one of your big winners last year, and you just did an interview again. In fact, let's play a clip before we talk about it. Let's play a clip from your conversation with Lawson Steele, who is one of the folks that you talked to last year about this trade. Let's have a little snippet of that, and then we'll pick it up on the other side.
The whole market, the demand supply imbalance, it's not a story about demand. Okay, demand is moving plus or minus a little bit, but nothing too exciting. It's supply. So, when you got demand of around sort of 800-900 million or so, you're getting supply reductions of 300 to 350 million per annum for the next 4 years. It is huge, right? That's just the automatic trigger. And that's what this market is about. And that step change happens in September, and it looks back kind of like a 2-year average, give or take, and adjusts accordingly. So really you've got the 30th of April compliance, and you've got September, which is your adjustment. But underneath all of that, you've just got this massive imbalance. And the price going up, which is forcing people to wake up and understand what's going on, and that just increases and makes people behave logically by buying more permits.
And that full interview is available on all tiers on Real Vision. So this is something interesting, and Raoul, I don't think that's on everyone's radar.
I love this trade. I love everything about it, and I love it because it came from Real Vision community. So it was this time last year, somebody hit me up with a Bloomberg message that said, I didn't know the guy from a big bank. And he said, I know you love chart. Take a look at this. I'm like, wow, it's this kind of big wedge pan. I'm like, what the hell is this? He goes, it's carbon. I'm like, tell me about it. What do you do? He was a carbon trader, an electricity trader. So I got him on the phone. He talked me through it. He explained the dynamics, which is that the EU are essentially limiting the amount of carbon availability of credits. And so what happens is they're forcing the polluters to buy more while reducing the supply. I'm like, this looks like a cryptocurrency, right? Where you've got a reduced supply and so they're burning the tokens, and here you've got government mandated demand. I'm like, this is incredible. Who should I speak to? So then second part, he goes, you need to speak to our analyst team. Our analyst team, I pick up the phone to this guy. He goes, hey, Raoul, you know me. I said, how do I know you? He goes, I'm a Real Vision guy who won a competition, flew out to see you and had dinner with you in New York. So he and the Citibank team talked us through the trade. So I put that on Real Vision. Then I said, who else do I speak to? They said, well, the best independent analyst is Lawson. So I get Lawson on. He goes, well, you need to speak to Pierre Andorand. So Pierre I've known anyway. He's the world's most famous oil trader. He also happened to be the biggest trader of carbon. So then he came on Real Vision and explained the whole thing. So that's a story of Real Vision, the power of the network and the hive mind and who's there. I put the trade on. It was the best performing commodity last year. So I wanted to get Lawson on and say, well, what do we do from here? It's gone up 100%. And so Lawson explains the trade, how average people can get into it, and where he thinks it goes. And the punchline to the story is a lot higher still to come.
Which is incredible given the gains. What was it, 91% you were up in it last year?
Somewhere close to 100% last year. And his view and my view is over the next 18 months could do the same again.